Well, Pembina Pipeline Corp has signed a deal to buy Kinder Morgan Canada in a $4.35 billion transaction. For more on this, we're joined by Business in Vancouver's Tyler Orton. So, Tyler, the details on this one are just coming in. What can you tell us?
Well, this is really a signal, a very strong signal, that Kinder Morgan Canada essentially wants to divest itself of this Canadian market. For the last little while, it's been operating as a standalone unit outside of the parameters of the former larger parent company that was based in the United States. But it's been on the auction block and went through 2 rounds earlier in the year. And finally, the executives came out and said that they weren't getting a price that they were satisfied with. This deal with Pembina essentially locks down a price point that they are very, very happy with. And it's interesting if you look at the details here with regards to the Cochin pipeline that they are going to acquire. It's just the Canadian portion of the pipeline, which runs from Saskatchewan all the way down to Chicago. Furthermore, there is even a deal to acquire a Vancouver-based import sort of bulk business, as well as some Edmonton storage business. So they're spread, I wouldn't say spread thin, but it is interesting to see how many tentacles this deal actually has to it moving forward.
Yeah, certainly. We'll have more on this story coming up as well. Now we'll switch gears to personal finances. Amid an already uncertain economy, there's discouraging new data on debt levels. So who is in the deepest trouble here?
Yeah, not great news for, say, millennials and Gen Xers. So the credit agency TransUnion, they show that these are 2 large cohorts that are continuing to pile up debt, especially compared with those older generations. If we take a look at the board here, I can show you that for those aged 25 to 39, millennials, we saw debt jump another 12.33% in the second quarter. If you look at their older group, the Gen Xers there, it just went up 3.4%. But look at the difference between those 2 numbers. You can see that the Gen Xers are carrying a lot more debt with them, and that makes sense. They're buying homes. They have more time to actually accumulate all of this. But look, it could be concerning if we see any rate cuts ahead of us from the Bank of Canada. This is coming at a more uncertain time in the economy. The central bank might want to jumpstart the economy by having a rate cut. That would mean cheaper capital available to more people. And let's be honest here, that means more consumer debt piling up. So if I was in any of these groups here, I'd just be watching your credit card bills for the time being.
Good advice. All right, Tyler Orton with Business in Vancouver. Thanks as always.
Thank you.